What's going on, everyone? Welcome to another video instructional to help you guys out, to help you guys and girls out, and young ladies as well. Help you all out in getting, adding more things for you to do in this market. I mean, the longer you're in this market, the more you'll realize that the more things that you know, the better. You know what I mean? So you're ready for any situation. So I'm gonna get right into it. Oh yeah, and before I do, if you're liking the content and if you do like it by the end of it, go ahead and hit the like button for me. It helps the channel and it helps others to be able to find it and to actually learn as well. And then also, if you want to keep up with everything that I have coming up, which is, like I said, it's going to be a lot of good stuff coming up, a lot of things that's going to help you in your trading, go ahead and hit that subscribe button for me. Also, if you guys want to have a one-on-one session to learn more about any particular thing in the market, if you want to learn more in-depth ways of how to trade the market, actually any market for that matter, forex, stocks, crypto, you name it, go ahead and go down into the description, and there's more information for you there. Let's get right into it. So today we're going to be talking about the wedge pattern. In this particular video, it's going to be the symmetrical triangle wedge pattern. Now there are many forms of the wedge. You have rising wedge, falling wedges. You have different. You have descending, ascending. But today we're going to stick to the symmetrical. And with this pattern, it actually is. It can be quite profitable for you if you trade it correctly. And then another good thing about it is it happens quite frequently. You know what I mean? Some patterns you don't see so much. You may see it here and there once in a blue moon. But the wedge is a fairly common pattern that if you're trading daily, you'll see it pretty often. So let's just get right into it. So the way that you can right away spot a wedge pattern is once the stock is moving in an uptrend or downtrend, or even once it begins sideways, you will notice you're going to see lower highs starting to form, as well as higher lows. See, normally in any type of trend, let's say an uptrend, you have, you'll have a higher high, higher low, and then a higher high to go along with it, and that keeps an uptrend going. And the inverse is in a downtrend. You'll have the lower lows, and you'll have the lower highs, and then a lower low to go with that. However, with the wedge, as you can see here, you have lower highs, but yet it's not making lower lows. It's making higher lows. So that should raise up some flags there. Like, wait a minute. It's making lower lows, so that's should tell you that the stock wants to go down, but yet it's making higher lows as well. So that would tell you that you would think the stock is going up, but what you're seeing here is the formation of a wedge, a symmetrical triangle pattern. The way to mark it up immediately, it's a way to identify it and mark it up immediately is, as I said, the moment that you see a lower high point and then also you see a higher low point, you can go ahead and mark it up like so. Now, as you can see, it's marked up and it's ready to go. What is actually happening here is the buyers and sellers in the market basically at this point can't make up their mind on the direction or the decision of this stock or of this equity. So, as you can see, visually you can see that it shows that it's a bit of indecision here. It doesn't want to go up at this moment. It doesn't want to go down at this moment. So what in essence, you start to see is like a spring. You see what and it acts as though it's a spring as well. With a spring, you push down on it. It's meant to be loose. It's loose. It's meant to be able to move around and do what it wants to do. But once you squeeze down on it, you're putting pressure on it, and you're putting it in a direction it really doesn't want to be in. So once you let it go, it's off to the races. So that's basically the same thing here. It's somewhat of a coil pattern or a spring pattern where it's getting squeezed in, squeeze, and at some point it has to break one way or the other, right? Stocks and stocks and any type of instrument that you trade, forex, crypto, they move. They always move. They always have movement, whether up or down. So one thing you can be sure of in the market is at some point a stock or any instrument that you're trading is going to move up or down, but it's not going to stay here forever. You can be assured of that. So yeah, anyway, you see here, it starts to make its movement, and it's only one of two things can happen, guys. You can have a break upward. Ooh, that line was terrible. Let's try that again. So you can have a break outward to the upside, or you can have a break to the downside. So anyway, moving along here, you have two directions that the wedge pattern likes to happen in. You want to be aware of the direction that preceded the wedge. Now, it doesn't mean that the stock is gonna go, because it's coming from a down move, it's coming on from an up move, that it's automatically gonna go up. But the odds are more in your favor that it's gonna go up. So now you have things that increases the odds of an up move, which is not guaranteed. It's not guaranteed at all, but the odds increase when it's coming from an upward movement, and then it wants to have a period of indecision. Then now you go ahead and mark it up, and you wait for a breakout of any direction. But you want to be aware that it came from an upward movement. All right, so that tells you as a whole, it's a bullish sentiment in the market at that period of time. There is a bullish sentiment that is attached to this pattern. So you keep that in mind. So what you see is, like I said, you'll either get one of two things to happen. You'll get it to come down. More than likely, you'll have that happen. But you can get either way. Either way, you can catch the move. Either way, once it breaks out and closes outside of your marked up trend lines here, it's off to the races, guys. So again, it could come from either way. Now, if it's coming, from a downward direction, then that kind of tells you, the sentiment is the bears are in control, sellers are in control at this moment. Now there's a period once it has dropped that there is indecision, as you can see here. The likelihood, which is not 100%, the likelihood is for price to go down once it breaks the wedge. But it can go either way. As I said before, it can go either way. You just marking it up and you're just ready for it either way it goes. Okay? Let's go to just a few examples. I'm going to be very brief here. I don't want to take up too much of your time. I know you got other things to do, such as I. So let's just get into it. So I'm going to give you a few seconds to see if you guys and young ladies can spot the wedge here in this pattern. This is actually a chart of Novavax, the daily chart of Novavax. And just let me know if you guys can spot it. I'll give you a second. Okay, here it is, guys, and I'm gonna break it down real quickly for you and how you could have taken advantage of it. So as you can see, you have lower high points. You know, the Novavax, it made a move up, right? It made a strong bullish move up, and then it got to a point of indecision. So you would mark up the lower high point here, and as you can see, it made a base here, but it made a higher low and then another higher low. But yet the high is not becoming higher. It should have breached this point up here. That would have made it a higher high, right? You see it's making higher lows, yet it didn't make a higher high. So therefore you should be ready to go ahead and mark up that wedge pattern. Once you see that, you say, okay, well, it's making higher lows. Okay, so let's go ahead and take this thing to the move up. But wait, it stopped well before it can make a higher high. So now you say, okay, let's go ahead and mark this up. So you mark it up, and as you can see, once it played around and actually, if you want to be a little bit more aggressive, once you become a little more advanced in it, you can actually become a little more aggressive, and you can do something. You can do a wedge within a wedge, all right? And then what you could do is you could take the breakout here down to the bottom trend line here, and then also you could take it up. So anyway, that's for another time, a more advanced way to put it. But I'm going to keep this as simple as I can, because either way you can make money. I don't care if it's simple, if it's hard, it doesn't matter. You can make money in this thing. So anyway, you see it broke out, and it was out of here from there. All right, guys. So you see, the coiling action, the spring-like action, where it gets tighter and tighter and tighter. The price gets tighter. I mean, and to the point where it barely even moves at all. Like it's moving from like 120 to 121, and it just kind of staying in that range. You see the range basically start to tighten up. That's another way to kind of let you know that a wedge is possibly forming. Once the normal range of the price, say it normally moves, whatever, it swings $5 this way, $5 this way, but then now all of a sudden it's swinging just $1, or if you're dealing with like the 1 minute chart, if it's starting to just swing 5 cents, and when it's usually swinging 30 cents, but now it's only swinging 5 cents, or you get the picture. If you're on a 1 hour, if it was normally doing $1 moves and now it's down to just 20 cents, now you kind of know, like, okay, well, price is tightening up. Something's going on. So there, you mark that up. And as you can see, once it broke it was off to the races. One last example here, guys. Let me know if you can spot it. I'll give you a second, and I'll get back to it. Okay, and this is a chart of Baba. Again, it's a daily chart, but this pattern, it works on all time frames. Anywhere down from the 1 minute, 5 minute, 10 minute, 30 minute, hour, 4 hour, daily, weekly, and anything else in between. So anyway, if you this actually has two, but I'm gonna start with the first one. You see here. Now, the reason that I marked this up is, as we explained earlier, it made a lower high point, but just keep in mind, people, before I go any further, keep in mind where it came from. It came from a bullish push up. So like I said, that increases the odds of an up movement. It doesn't guarantee it, but it increases it. It's just something to keep a note of. So anyway, marked up, it made a high point. It made a lower high. So you would think, okay, it made a lower high. Well, it should make a lower low. Well, it didn't. It made a base, and then it made a higher low. So it made a lower high and a higher low. Once you see that happen, the moment you see a lower high and a higher low, you mark it up immediately. Mark it up as soon as you see it. So had you marked this up, you see here, had you marked that up, You could have caught the breakout, and it was off to the races. It was to the moon from there. It was from the 170 all the way up to almost near 190, around 187 for a $17 move in the stock price. All right, as I said earlier, or not too long ago, there's actually another one. Can you spot it? If not, that's fine, and that's what this video is for, is to help you to spot it. Here it is. There it is. You have two wedge patterns here. All right, and the reason I marked this up is the same reason I marked this one up. It made a high point. It made a lower high. Made a low point, but it made a higher low. As soon as you see this happens, you go ahead and mark it up. So once price broke out, you could have got a nice movement from the 180 all the way up to about 186. So about $6 move. This stuff is not any chump change, people. This is $6. Depending on the share amount you have or the options contracts you have, that's a good move. Now, I would like to note, as you can see with this example, a lot of times, not all the time, but there's two ways to capture the take advantage of the wedge pattern. One is the breakout, and this actually goes for many patterns. Actually, one way is the breakout. The next way is to get the retest, and then take the retest up. And in this case, you'll see you could have won either way. Had you taken the breakout, you would have got a good $6. It came down and it retested the triangle here, and then it took off from there. So had you been a breakout trader or a retest trader, either way, this pattern could have helped you out big time. So that's it for today, guys. I want to make a brief video. I don't want to go too crazy with it. So again, just a quick summary of how you guys can utilize the wedge is, once you see a lower high point and then you see a higher low point in the same area, you go ahead and mark that up, and you have your wedge pattern. You wait for the breakout, and that is money to be made, money to be had, people. You know. So that's it for today. Like I said, if you enjoyed the content, tell a friend and hit that like button. If you're not subscribed already, go ahead and hit that subscribe button. I promise you, you won't regret it. You're gonna have many things that you're gonna learn from this channel over time. I've been getting back into it, getting back into the swing of making videos here for you guys to help you. I have been personally trading for about 7 years, so the experience I'm gonna put here is definitely gonna help you guys in your trading journey. Until next time, thank you for watching. Happy trading.